Good morning, listeners, and welcome to the Trade Talk podcast. In the US, the infrastructure plan that would represent the biggest burst of spending on US public works in decades. This would help to extend this year's rally for steelmakers. Asian markets are completely mixed as investors awaited a key report on US inflation. Treasuries and the dollar were steady. CPI data are expected to show prices paid by US consumers grew in July at the slowest pace in 5 months, though remain elevated. Now let's move on to trade setup for Indian stock markets. In the last 5 days, the market remained in the narrow range of 16,170 and 16,350 on the high side. When we see vertical upward movement in a stock or index, we have to face such type of formation. It is a time consuming but bullish consolidation sort of formation. And on the higher side, if we see the market is crossing the levels of 16,350, then it will help the market to move towards 16,500 in next 1 or 2 days of time. So it will take time. We are not expecting market to touch the levels of 16,500 so easily. But yes, gradual expansion is not ruled out. On the downside, 16,150 would act as major support, and below that we can expect decline towards 16,000 levels. However, at such a high base, we need support of index giants, namely Reliance Industries, HDFC and TCS, or from the major sectors like bank sectors for the market to move higher. If we consider the formation of Reliance Industries, HDFC or TCS, then all the stocks have corrected in the past, in the near past, and now they are reversing back from their important support areas. So we may see some rally in these stocks in next few days, and that will help our markets to move higher. Sector specific, if we consider the broader market, then we are of the view that we need to focus again on banks, because most of them like ICICI Bank or State Bank of India, they have corrected to their important support areas. So from here, if they starts reversing, then we can expect some rally in this stocks, especially those banks which are facing to corporates or commercial facing banks. Apart from that, if we consider the IT sector, then there we are expecting some more broad-based activity, and mid-cap IT stocks should do well. Metals have corrected to their support areas, especially Tata Steel is currently available at 1370, 1350. It was at 1450, 1460 levels some few days back. Sale, which was around 140, is now again fallen to the levels of 123, 124. So these are the stock on which we are focusing, and based on their reversal formation, we should look for adding them to our positional portfolio. Friends, that's all from my side for the day. With this, I am ending today's call. Thank you very much for listening in, and have a great day to all of you.